welcome back to our channel. Today, we're diving deep into the world of finance to help you understand and analyze financial statements. Whether you're a student, a professional, or just someone interested in finance, this video is for you. So let's get started. First, let's define what financial statements are. Financial statements are written records that convey the business activities and the financial performance of a company. They are crucial for investors, regulators, and management to make informed decisions. There are three main types of financial statements: the balance sheet, the income statement, and the cash flow statement. Each of these provides unique insights into a company's financial health. Let's break each one down. The balance sheet provides a snapshot of a company's financial position at a specific point in time. It consists of three parts: assets, liabilities, and shareholders' equity. Assets are what the company owns, such as cash, inventory, and property. Liabilities are what the company owes, like loans and accounts payable. Shareholders' equity is the residual interest in the assets of the entity after deducting liabilities. It represents the ownership interest of the shareholders. Next up is the income statement, also known as the profit and loss statement. It shows the company's financial performance over a specific period, typically a quarter or a year. The income statement includes revenues, expenses, and profits or losses. Revenues are the income generated from normal business operations, while expenses are the costs incurred to earn those revenues. The bottom line, or net income, is the profit or loss after all expenses have been deducted from revenues. The cash flow statement provides a summary of the cash inflows and outflows over a period. It's divided into three sections: operating activities, investing activities, and financing activities. Operating activities include the primary revenue-generating activities of the business. Investing activities involve the purchase and sale of long-term assets and investments. Financing activities are related to borrowing and repaying bank loans, issuing and repurchasing stock, and paying dividends. Now that we understand what financial statements are, let's talk about how to analyze them. The goal of financial analysis is to evaluate a company's performance and make predictions about its future performance. There are several key ratios and metrics used in financial analysis. Here are a few important ones. Current ratio measures a company's ability to pay short-term obligations, calculated as current assets divided by current liabilities. Debt-to-equity ratio indicates the proportion of equity and debt the company uses to finance its assets, calculated as total liabilities divided by shareholders' equity. Gross profit margin shows the percentage of revenue that exceeds the cost of goods sold, calculated as revenue, cost of goods sold divided by revenue. Return on equity, ROE, measures the profitability relative to shareholders' equity, calculated as net income divided by shareholders' equity. Let's go through a practical example to see how these concepts work together. Imagine we have a company called ABC Corp. Here's their balance sheet, income statement, and cash flow statement for the year. From the balance sheet, we see total assets of $500,000 and total liabilities of $300,000, giving us a shareholders' equity of $200,000. The income statement shows revenues of $1,000 and net income of $100,000. The cash flow statement reveals positive cash flow from operating activities of $150,000, cash used in investing activities of $50,000, and cash flow from financing activities of $30,000. Using this information, we can calculate key ratios. For example, the current ratio is 2.1, indicating good short-term financial health. The debt-to-equity ratio is 1.5, suggesting a balanced use of debt and equity for financing. By understanding and analyzing these financial statements, you gain valuable insights into a company's financial health, operational efficiency, and growth potential. Thank you for watching. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more financial insights. If you have any questions, leave them in the comments below, and we'll be sure to get back to you. See you next time.